In today's episode, we are going to be talking about price targets as far as Cardano is concerned. So no BS, just straight to the point. So first of all, the first thing that you have to remember is you have to analyze your risk. So let's say, for example, you're trying to long this particular asset, right? You're supposed to determine whether it is worth taking the risk. And you have to look at the probabilities right now. And if you were to ask me, I really think now is not really the right time to be sort of buying into this particular cryptocurrency, because we are most likely going to face some sort of correction. So of course it doesn't really matter in the future. The price of ADA is going to continue appreciating, but you have to understand that you can get a better price. Why not wait for the prices to become to get a little bit cheaper so that you can buy more ADA coins for your money? When you end up just rushing, right, you're obviously going to spend more money to acquire less ADA tokens or coins. So it's better for you to wait for the prices to sort of go down a little bit than just invest for the long term, because we all know for a fact these cryptocurrencies are going to end up doing very well in the next coming 6 to 9 months. So it doesn't really make sense to rush. So this is one of the reasons why I'm always going to be giving you these updates. When it's going to be time to buy, we are definitely going to be buying. And for those of you who have been subscribed to my YouTube channel, right, I gave buy recommendations for AD when it was around 13 cents, 13 to 15 cents, and probably a lot of people have made a lot of money. So as you can see right over here, we have like a lot of selling pressure coming through, which is very, very indicative of a sell-off. And this particular phase, I really believe this is the distribution phase. This is going to be like a temporary distribution phase, and then we're going to eventually end up going back down. However, we have a possibility of having like a short squeeze. As you can see right over here, right, we are beginning to form these good green Heikenhashi candles. As you can see, I'm using the Heikenhashi candles. I don't like the regular candles. So as you can see, we're experiencing like a little bit of buying power. However, we have like a lot of resistance, because this particular area, let me just highlight it. Yeah, it should be around here. Okay, this particular area, 140 and above is a lot of resistance. The reason why I'm giving you that particular area is because if we use the Fibonacci levels, right, let's say for example we get this area and we push it there, right, as you can see, 144 is the 0.61 level, which is the 61.8% fib level. So this is most likely where a lot of people are going to be taking profit. So if you take a look at the price appreciation percentage, right, you have a possibility of making something between 15 to 20% in terms of profit if you do get this particular risk. I mean, if you take this risk, right, you can obviously end up scalping it if we're going to have enough buying bullish pressure. You know, that is if it's going to end up pushing towards the upside. But however, I really believe that we might have another retest of this particular high right over here, even though previously we did attempt to go to the previous all-time high, which was around $1.46, close to $1.50, right? However, we ended up being rejected at around $1.44. So this is one of the reasons why perhaps this time around, if that's a big if we're going to continue our bullish momentum, and right now it really seems we are having some sort of bullish power coming through. The bulls are defending at this particular moment, so this is only temporal. Okay, if you're going to leave this trade for like a very long period of time, right, let's say more than 72 hours, you're most likely going to end up losing. So this is going to be like a very quick scalp trade for all those risky traders out there who are most likely betting on the retest of this particular all-time right over here. So what usually happens is there's always a liquidity grab. Liquidity makers, or market makers, usually grab liquidity. So if we're going to, that's a big if, okay, if we're going to end up pushing up high, right, and crashing through this resistance over here at $1.38, there's resistance at $1.38, and there's also resistance at $1.43. So if we're going to end up breaking through that particular resistance, right, we might wick to the upside and grab these liquidities. Moreover, some people are short selling, so there might be like a short squeeze, and then eventually we're we're going to continue coming back down, because we have to sort of correct, because this has been, you know, like a very good push up in terms of the bulls. And as you can see, if we flip over to the daily, right, we have obviously received quite a lot of accumulation. This was the accumulation phase right over here. The reason why I'm saying this particular you know, mini bull flag right over here was just the beginning of the accumulation phase, and this is where we go to like defeat the bears. And as you can see right over here, we had like a lot of volume. We had like way too much volume. And during the bullish continuation right here, this particular era, right, we also experienced this amazing surge in volume. But recently, even though we were pumping, right, even though we were pushing through here, right, we didn't really see the continuation of the bullish momentum in terms of having sort of a gradual increase in terms of volume. So this is one of the reasons why this particular area is an area of distribution. So distribution does take some time, because these things don't just, you know, go up in one particular pump or go down in one particular time. There are phases. You know, you have to have the accumulation phase, and once the bears are defeated, right, then you can continue pumping and you can see higher prices. So when it comes to distribution phases, especially in the bull market, right now we are in a bull market. So you have to understand that these distribution phases are going to be short-lived. Okay, the dumps are not going to be as impactful in comparison to the pumps, because we have overall defeated the bears. Even though we're going to be having like price corrections, right, these price corrections are going to be bought up quickly, and these distribution phases are going to sort of last not as long as the pumps, if you know what I mean. So this is one of the reasons why, even though we expect like some correction, you have to understand that these corrections are just going to be very, very short-lived, and eventually we're going to end up pumping towards new all-time highs and all that good stuff. And we're going to be able to like sort of have these situations where we can usually end up buying back. So my advice to you is, at this particular moment, it depends on what type of trader you are. If you are a scalp trader and if you're looking for like a very good short-term trade, right, then probably you can think of taking this particular trade. However, you have to look out for these resistance areas. Like for example, this particular area, $1.30 all the way to around $1.36. It's containing like a lot of resistance. Okay, so you have to look forward and look out for these particular areas, and then just, you know, put your stop losses in place and just do what you're supposed to do the smart thing, and you guys are going to be good to go. So this is what I wanted to show you. So this particular area has got a lot of resistance, quite a lot of resistance. So let me even put the red thing right over there. So if we end up perhaps breaking through this particular area, you know, and then I'm going to make another follow-up video. So that's probably going to be released like in the next 48 to 72 hours. However, at this particular moment, I'm just interested in this particular volume, which is coming through here on the 1 hour. You know, you also have to remember that the 1 hour is a very short time frame, and as you can see right over here, we're having some sort of rejection. And let's say, for example, let's grab the Fibonacci 2. We get it from here to there. So let's say we end up going to the 61.8% fib level, which is around $1.22, right, and we find some support right around this particular area, right. I see the price going close to $1.30 and getting rejected right around this particular area. Anything which is going to be like above $1.30. So if you take a look at the percentage in terms of that potential pump, right? So you guys might potentially make a 5% before we get to this particular rejection area, because that's an area of resistance that you're supposed to be looking out for. So that one right over there, that could be your target. And then we also have this particular you know, target. Let me switch over back to the one. This particular target right over here. Okay, $1.39, $1.40 and above. So those are price targets. However, if the bulls are going to continue pumping up, just know that there's going to be a liquidity grab right over here. and we're most likely going to end up going back. So anyway, let's talk about lower prices. Like, what price points are you supposed to be buying back in order for you to like capitalize off of the bullish pump in the next coming 6 months? I really think the fair price is obviously going to be 90 cents and below, but the best area should be close to 36 cents. Okay, anything which is going to be close to 36 cents, that will be very, very good. So for now, let's assume this particular area is the top, right? So let me just get rid of these things. So let's assume this particular area is our potential price top. Where would you end up buying? Okay, so we've got like two areas where we can draw the Fibonacci levels, right? From this particular point of accumulation, this was a very good accumulation area. As you can see, before the price surge in terms of volume or card, we can clearly say that this was a very good area of accumulation. I think in earlier I said distribution, right? I should have said accumulation. This was an accumulation phase, because we were accumulating and then we started pumping up once we defeated the bears. Okay, and this most likely is going to be like distribution phase once a lot of people get to buy, and then there's no more boost left to like propel the price to go up higher. Then the price sort of corrects a little bit. So we're going to take a look at two Fibonacci levels. Okay, we're going to look at the Fibonacci level from this accumulation phase. Okay, so let's assume that this is the end of this particular uptrend, right? Let's just assume. Okay, so good areas of you getting to buy and buy for the long term are going to be between the 38.2% fib level and the 61.8% fib level. So this would be your ideal area, but sometimes, usually the price tests the previous area before the breakout. Okay, the price usually gravitates towards this particular area because, as you can see, there was like a lot of trading activity which was going through there. So it's very easy for the price to like sort of slice through all these areas and then come back down to this strong area of price control. Because this was like a POC, like a strong price control type of area. So most likely we could potentially weak. Okay, so this is one of the reasons why it's always important for traders to sort of set these traps that seem impossible, but sometimes they do get filled. Okay, in the past I remember I bought some zilliqa at extremely cheap prices because there was an extreme weak, like a price drop towards the downside, and it was quickly bought back up. So sometimes you might just end up being like it. So this is one of the reasons why sometimes you just have to like put these exaggerated price, orders for lower prices in case you just end up being lucky. Okay, so we're most likely going to be interacting within this particular range for like a very good decent amount of time, and then eventually we're going to either come to this particular area and then push up. You understand? So obviously getting to accumulate for the next bull run for you should start between 87 cents to around 60 cents. Okay, so that would be like your first dollar cost entry. So this is going to be your first dollar cost entry level, and then your second dollar entry level is going to be around this particular area, close to 36 cents. So anything which is going to be either 36 cents or below, you can add some more long-term accumulation to your portfolio in terms of Cardano. So this is going to be your area 2 in terms of accumulation. Then if you get lucky and then the prices come to this particular area of accumulation as well, which is highly unlikely. I really think this is highly unlikely. Going back to 15 cents, by the way, when I gave you that buy recommendation for ADA about 6 months ago, right, we were in this accumulation phase. All right, so if you imagine the amount of pump that we had, right, that was almost a 657% from this particular area that I told you to like buy this particular asset. So I really believe that you guys have made a lot of money, so congratulations. So this is highly unlikely to happen during this phase of the cycle, right? So I really believe that these two areas are going to be good areas where you can buy for the long term, and perhaps the market cap of Cardano could go to around 80 billion US dollars. Okay, so the price of Cardano could potentially reach $2.50 to around $4 or even $3. So that is highly possible to double our market cap. So my Cardano price prediction is obviously going to be anything between $2.50 all the way to around $4. So that's roughly going to give us 110 billion US dollars or anything which is above like 100 billion US dollars. I think that is absolutely possible because we're going to experience new money, and then we are going to have like new retail investors, because the retail investors that we have at this particular moment are either the ones who stuck around from the 2017 cycle, or the ones that are just the ones that already heard about these market cycles, and then they're just trying to like get their initial foot in the door, if I can put it that way. But the real retail FOMO hasn't even started. Like, this hasn't even started because BTC has only done like literally like less than 110% price appreciation from its previous all-time high, because the previous all-time high of Bitcoin was around 20,000 US dollars, right? Right now we are around 48, and we reached as high as 58,000. So we have only done like a 1x in terms of BTC, like a 1x plus some change. So usually BTC does go up by a factor of 10. So if we previously had 20,000 US dollars, right, as a previous all-time high, we could potentially go above 150,000 US dollars per BTC the next top of the bull market, if you know what I mean. So if you take a look at that, right, then everything gradually is going to also appreciate in value. So Cardano going to 110 billion US dollars is just I think it's a very conservative, and it's something which is absolutely achievable, and it is very probable due to the fact that we're going to obviously like see a great inflow of retail money, and this whole entire space is going to absolutely grow. So that's that. So if you guys are going to be looking for like a quick scalp, like in the future, I mean in the near future, probably this week, right, when the prices go down, because I mean, to be honest, right, we're having like a lot of selling pressure, and we're most likely going to end up correction. Like, being at $1.23 right now is obviously a blessing, and if the prices go up higher, if it goes back to $1.40 or even $1.60, you guys already know what you're supposed to do. Sell, get into USD Tether, and buy Cardano way below $1, because $1 is definitely coming. $1 and below is definitely coming. That's just like a very simple price drop from now, and going back to, like, for example, 66 cents is something which is going to happen, because we had like these resistance areas according to these Heiken-Hashes. So best believe we're going to find all these price control areas, and we're most likely going to be able to like test them. So best believe we're obviously going to do this retest of liquidity, and as you can see right over here, right, so besides the 15 cent to 30 cent level, right, we have like a lot of price control according to the visible range, right? And the other next area of POC, right, the price control area is this particular area. It had a lot of trading action, so there's obviously a lot of buyers and sellers, and there was an exchange of assets in this particular area. So best believe we're most likely going to come back down and test the liquidity. So what I usually encourage people to do is buy after this area has been tested. Okay, if you really want to like do, I don't know, like a 2-day scalp or something, so the price is most likely going to come back here, then try to push up, then eventually come back down to these particular areas. And then once we have accumulation again at this this lower area, then we're going to continue propelling to new all-time highs. Okay, so those are the different scenarios that I'm giving you. Okay, and just like I told you in my previous episode, don't do wishful trading. Like, figure out resistance areas, figure out support areas, and then see how the price reacts to those specific areas, and then from there you can either end up, let's say for example we've got resistance above 150, let's say for example we've got resistance here, like we have $1.46. Okay, let's say we break through this particular area and then the price comes back down and uses this particular area as support. What does that tell you? It tells you that there's more bullish momentum which is coming through, and then if we see like very good amounts of volume coming through, then we can probably continue going to around $1.60 or even $1.80, $2 and that stuff. So it's all about reacting to what the price does and the type of data that you get. Like for example, this particular area, the reason I'm saying we might potentially go back and test this particular liquidity up here is because I'm seeing how the price is reacting. We're finding some sort of support and we are sort of maintaining our composure right over here. And if you also get to like scrutinize in terms of the volume on the smaller time frame, right, you can see that the buying power right over here is kind of growing. If you look at the bottom right, I mean this is just a smaller time frame. Okay, if you look at the bottom right over here, we're having like a surge in terms of buying power coming through, and just like I told you, right, the immediate target is obviously going to end up let's say for example roughly, if we do that, right, anything which is going to be above this particular area is going to be your first targets. Remember, you've got like different targets. You've got area resistance 1, which is $1.30, anything above the 61.8% fib level, which is also coinciding with this broken Heikenhashi candle right over here. That's your first level of resistance. You've got your first level of resistance. See how the price reacts when it reaches this particular area. After that, it's also going to have like another sort of resistance. Then take a look at how the price is going to react to that particular area. Then you simply go in. So just like I told you here, right, we are obviously seeing the bulls defend on a smaller time frame. Okay, so I would probably prefer going back to the 61.8% fib level, which is around $1.22, but there isn't like a very big price difference. The current price is $1.24. My ideal entry would be around $1.22. So this is a trade that I would take, and just sell around $1.28 to like grab this 5 to 6%, whatever I might be able to get. And if in case we end up going to the previous all-time high, that would be like a 15 to 20% price appreciation from the current price. So if we grab that, we measure that, that's almost like an 18% trade right over there. But of course, if you're using leverage, you're obviously going to make like way much more money. So I wouldn't advise anybody to like leverage trade this particular uptrend at this particular level, because the risk is just way too much. So I would rather just trade using spot. So I really hope that all this makes sense. So more of the story is, if you are looking forward to like capitalizing off of the next wave up in terms of Cardano, right, look forward to like filling your bags between anything which is going to be like less than $1, ideally anything which is going to be between 60 cents to around 87 cents. That's going to be your first entry. Then your second entry in terms of dollar cost averaging should be between 36 to around 45 cents. Okay, those are going to be like very good areas to like get to load for the future. And now is not really the great time to buy for the long term, because we might potentially end up correcting. As you can see right over here on the daily, we are forming these Heikenhashi candles, and they are just simply signifying that okay, we might have like a little bit of a trend reversal. And if we flip over to the weekly, right, so take a look at the red line. So the red line is the it should be the 12 simple moving average. So let me just take a look at that. Yeah, it should be the 20 simple moving average. Usually the price goes back to the 20 simple moving average. So if you want to sort of invest for the long term, right? And this is coinciding with our area of distribution. Remember, I gave you this particular area of distribution, right? Hold on, let me make it very visible for you. So this particular area of distribution, let me change the color to purple. No. Yeah, let me change the color to purple. Yeah, so I was supposed to use that. So if we flip over to the daily, right? As I previously explained, right, we had like a lot of accumulation. And this was also another accumulation area. Okay, accumulation area and another accumulation area. So if you take a look at where the 20 simple moving average is, it is sort of corresponding to this particular area. So that is obviously like a very good entry for the next wave up, because the market moves in waves. Okay, wave one, boom, correction, then wave two. So getting to fill your bags around this particular area, that would be like the safest entry and the highest value for your money in terms of the next coming bull market. But sometimes shit happens and things just go completely haywire. Sometimes things just happen that you don't really expect. So sometimes prices could crash. So this is one of the reasons why this particular area could be another good long-term entry. But this is highly unlikely because we spent a lot of months and weeks trying to overcome the bears right over here. So it's highly unlikely. But this particular area is very likely. Anything which is going to be close to 36 cents, it could be 40, it could be 50. That would be very, very good. But remember, just like I told you, you've got like multiple dollar cost entry levels that you could look at. You could look at 87 cents to around 60 cents. That could be your first dollar cost average entry level. Then the final one could be between 30 to 36 cents. So a lot of you are saying, hey Mona, I think it's very impossible for the price to go back down to these particular areas. Nothing is impossible, because if we take a look at XRP, okay, XRP did very well a while back, okay, then it ended up dumping even more than it pumped. So let me flip over to the daily. So this was XRP a few months ago, right? It ended up pumping. And then guess what happened? It even dumped way below its initial pumping area. Okay, so now can you imagine the people who bought around 70 cents? Okay, you buy around 70 cents, 77 cents, and then the price goes back to 19 cents. Okay, so these areas of accumulation play a key role. Okay, areas of distribution, because this was distribution right over here. Okay, it played out in a number of weeks. It just didn't happen. It just didn't drop at once. It took a while, okay, for it to drop. So Cardano is just like at the beginning of this particular distribution phase. Of course, it's not really going to be as extreme as XRP, because with XRP, some other factors were there, but people who trade like me, right, we didn't get caught in this particular downtrend because we understand how accumulation and distribution phases in a bull market work. So there's absolutely no reason for us to like get caught up in this particular downtrend. But please let me know, were you caught up in this particular situation, and how did you react and respond, and what did you learn from this particular scenario? So these are the types of things that I usually talk about on my private lessons, because I also provide like private lessons for individuals. So in case you guys are interested in taking your trading to another level, please let me know. My email is on the pinned comment section below, because I really believe it is important to teach a man how to fish than giving him fish on a daily basis. So you guys have seen my track record on my YouTube channel. I've got like a winning rate of around 85%, at this particular point. Like, I barely miss a trade, and you guys have seen my track record. Go through my YouTube channel, see the proof for yourself, and then we can do the thing, take your trading to another level. So feel free to email me on my email listed on the pinned comment part of the comment section below. So that's all I have for you today. It's been your boy Muna, aka Beyond 10x. Remember, trading is all about mathematics. It's all about safeguarding your profits and making sure that your portfolio grows. It's not really about hodling all the time, even though hodling does for the most part work in the long run. But your goal, I believe, is for you to like quickly multiply your money. So you only get to do that by taking advantage of the volatility. Let's say, for example, you cashed out around 77 cents, right? And then you had like a profit of around 10,000. Then you buy back XRP when it was back to 19 cents. Like, wouldn't you be richer in comparison to the people that didn't sell here? You'll probably be way much more richer. You would have like better growth in terms of your portfolio than people who are just stuck holding their cryptocurrencies. So just look into accumulation and distribution phases in terms of trading cryptocurrencies, forex, whatever. Then you guys are going to be able to like pinpoint these different areas and just do your own thing. So that's all I had for you. It's been your boy Muna, aka Beyond 10x. This has been my Cardano trading update for the day. I'll probably be back with another brand new episode because I really want to like dive deep into BTC, because I really believe BTC is also doing some stuff. There's some stuff which are brewing, and I really believe that BTC is going to go close to 30,000 US dollars like before the 15th of March. So today's the 2nd of March, right? Yep, today's the 2nd of March. So before 15th, I think we could potentially see 30,000 US dollars, or 36, or even below 30,000 US dollars. So I'm probably going to be doing like another deep dive into BTC. Remember, these distribution phases take some time. Okay, it takes some time to happen before like a good sizable move happens. So be patient, do what you have to do, and don't get caught up. Be smart. Okay, talk to you a little bit later. Bye.